All right, I assume we are live now. So let's get started. Welcome to our monthly webinar. It feels like it's been a few months since I've been on one of these. I'm looking forward to having a discussion with Barry here today. Actually, Barry will do most of the presenting, but I will fill in at places. A couple things before we get started. We are going to be talking about renewable energy tax credit for nonprofits today. That's the theme of today's conference. A little bit of housekeeping before we get going. This is available for CPE. If you stay logged in for 50 minutes and you answer the polling questions, you will be eligible for CPE. It'll be emailed to the email address that you registered with, and that should go out fairly soon. If there's any issues, you can reach out to us on that, but check your spam before you do that, because sometimes these certificates end up in a spam email box. One other thing I want to say before we get into this is many of you may know this, but we host a conference called Bridging the Gap. Bridging the Gap will be July 22nd, 23rd, and 24th in Denver, Colorado, which is actually Barry's neck of the woods. This year, I'm going to put a link to the conference in the chat. And so if you want to take a look at that, it's btgconference.com. It'll be a great time. If you've ever heard anything about it, you've probably heard rave reviews. It'll be a great conference. There's up to 15 hours of CPE. I think there's going to be 40 plus sessions available, so you can pick and choose which ones that you want to go be part of, but you can get up to 15 hours of CPE. And actually the plan right now is that you'll have access to all the recordings afterwards and be able to get CPE after the fact too, for the ones you weren't able to attend. And last thing on that is it's early bird pricing right now. So early bird pricing goes through the end of May. So we are May 6th right now. So if you're interested, just make sure you go in and register. All right, moving on. Barry, you want to go to the next slide, please? Next slide. I am Randy Crabtree. You saw that under my name already. Partner and founder of, co-founder of Tri-Merit Specialty Tax Professionals. And Barry, you want to move on?
Yep.
Barry told me my slide would take 20 minutes, so that's why I only took 30 seconds there.
You can elaborate on this slide.
I am going to elaborate on this slide. This Barry Devine with me today. I've known Barry for close to 19 years now. Barry actually is the first exposure I ever had to the R&D tax credit, was meeting Barry actually in Denver 19 years ago. August will be 19 years. And so I've known Barry a long time. And Barry is very knowledgeable on all things specialty tax, and specifically right now he is very active with our renewable energy tax credit team. And before we even get started, we're going to jump into a polling question. So Mark, if you can get the polling question up, if you look to your right, I think it's on my right, you'll see the polling questions are up. I just want to make sure everybody responds to that poll before we close it out. And I see responses coming in, so get your answer in. You have to answer these polling questions. I don't think I need to read this for you, but just make sure you answer these polls. All right, I'm going to move on. Tri-Merit, we are a specialty tax professional firm. We deal with all sorts of credits and incentives. R&D tax credits being the thing we started with, but renewable energy is a very, very big emphasis for us right now. In addition to cost segregation and some other commercial energy incentives. Those are right here. You can see that pyramid of the offerings that we have available. Today, we're going to concentrate on that middle section, the renewable energy incentives. Barry? Just a little structure, because we do things like cost seg and 179D and 45L, in addition to R&D, those all really are following at some point under the energy incentives group. And then if you go to the left side there, what we're really going to concentrate today is elective pay, which is for nonprofits. Nonprofits could take advantage of renewable energy tax credits and turn it into a refundable tax payment. And so that's going to be the The bottom line of this whole discussion, but we're going to talk about, next slide, please, Barry. We're going to talk about, really what these benefits are for nonprofits, who's eligible. Let's check it out, make sure they're doing something that qualifies, what the process is to turn this into a refundable tax payment or direct pay. Discover strategies that are potentially out there to maximize incentives. There's some bonuses we'll discuss that are out there, and then just get into any nuances that you need to be aware of from a tax and accounting standpoint. And here's really the agenda overview. We're going to talk about the Inflation Reduction Act, which is where this was defined. We're going to talk about different programs. There's an ITC, investment tax credit, production tax credit. We'll talk a little bit about that, but more we're going to concentrate on the nonprofits, the funding opportunities, which is that direct pay or refundable credit. That's how we're going to monetize this. And then the tax strategies, which seems odd sometimes tax strategies for nonprofits, but we are going to get into tax strategies for nonprofits today. And we're going to concentrate on nonprofits because this is really an area that we are seeing a lot of activity. The nonprofit realm has been very active with the renewable energy tax credits. And so Barry will go into some examples on that today. You'll see what we've been able to do so far with some nonprofits. You'll see where the excitement is. But let's just really quick background on the Inflation Reduction Act. If you've heard me talk about this before, you've probably heard this, but I'm going to reiterate it because this is really a significant benefit. Now, when I'm talking about the renewable energy tax credits, I'm living in the moment right now. I'm living on May 6, 2025, and the laws that we are currently under. Because everybody knows right now, everybody knows that we don't know what's going to happen in the future. And that's always the case with tax law. But we're going to talk about the tax law that exists as we sit today. Could things change later this year? It's possible. I don't even say it's possible. It's probable. Does it mean it will eliminate the renewable energy tax credits? My personal opinion is not completely. I think there will be some pullback on some of these programs. But this is just my personal opinion that there will still be incentives out there. But I guess the more important thing is the importance of today. We know where we live today. If we're going to be looking at any of the incentives, now's the time to start doing it. This just gives you a list of all the different incentives that are defined in the Inflation Reduction Act with energy and climate provisions. Those green highlighted ones are really where we concentrate our time on. I'm not going to dig into those, but if you want to refer back to the slide, which you do have the slides, I think they're in the over on the right hand side. I think you can see these slides as well, downloadable version. And I'm going to go back real quick to, you don't have to go back, Barry, but I want to talk about these incentives from a why these are significant. When this was first defined, the Inflation Reduction Act, which is what, like 3 years old now, or 2.5, the value of these incentives was estimated to be about $400 billion. After certain investment or credit industries took a look at this, they realized that the value of these incentives is like 1.2 trillion is the estimate right now, assuming nothing changes. I just want to put that in perspective. The R&D tax credit, which you've all probably heard of, and this is over a 10-year period. The 1.2 trillion is a 10-year period. It's a cost to the government, but a benefit to taxpayers. For us, the R&D tax credit's estimated at 100 billion during that same period. So this is like 12 times what the R&D tax credit opportunity is. And that's why Barry's been spending a lot of time and effort in this realm, because taxpayers can recoup a lot of either taxes that they paid if they're for profit, or taxes that they didn't even pay if they're a non-for-profit. And so, let's move forward now again, Barry, please.
Yep.
And one more. And then now, we've all heard about executive orders coming out, and some of these executive orders, in fact, let's just go to the next slide, Barry. Some of these executive orders have really affected potential renewable energy incentives. But in reality, what it's done is it's put maybe a damper on processing for renewable energy. What came out back in January, people got all up in arms, is like, okay, does this mean there's no more credit? No. What happened with an executive order back in January is it said that we are not going to be paying out grants for the most part. What we're talking about is not a grant. What we're talking about is tax code. Tax code, at least as far as I know, cannot be affected by an executive order. So an executive order may slow down processing as people try to figure out what it is. But from my standpoint, what we're doing with incentives is not affected by an executive order that came out back in January. All right, move on, Barry. And you can expand on any of these you want. So now I'm going to kick it over to the expert, the man, the myth, the legend, Barry Devine. Take it over.
All right. Thanks, Randy. Yeah, so we do these webinars in certain series, and we're like, okay, well, here's funding now, and here's the legislation, there's statutory, discretionary, and then on the next webinar, we're going to talk about, where we are with the funding opportunities. And so this has been a little bit on hold just because, as Randy explained, the executive order, right? 6417 is the tax code for elective pay. So not-for-profits it's statutory in order to claim elective pay, and so are the ITCs, PTCs. So all of that is, kind of business as usual for us. And on the front end, we normally don't work on the front end because we, work on tax credits. We come in at the end of the year and we look back a lot of times. And just with the renewable energy and how not-for-profits get funding, how is it going? How's it getting? What are the appropriations? Does it go down to the states? Like, how does it actually get there? And some of the mechanics and mechanisms, we're just a little bit closer to that and just kind of watching those so we can see what's coming. What's the pipeline look like? How do schools get the funding? How do hospitals get the funding? How do what's the pool for universities? Like how does this work? So we just kind of throw this out there for if you're looking to get the money on the front end, there are resources for you. The State and Community Energy Program under the DOE was, one of the mechanisms for the education piece, and just the mission statement remains the same, even though the executive order may have frozen or at least paused some of the appropriations. Right, the funding could still be there. Maybe some will be taken away, some won't. But the mission remains the same for deployment of clean energy technologies and catalyzing local economic development and creating jobs and reducing energy costs and all these other things that are really great for our communities and more specifically for the not-for-profit entities. So it's just been really, really rewarding work. Helping these not-for-profits get these these refundable tax credits and seeing how it helps. And I have some examples at the end of this that we're going to go through on some of the clients we've had that are just really, really just fantastic clients that we're just super thrilled to be helping. So yesterday I did call the SCEP to try to get like an update just so I could be on this webinar and be like, okay, here it is. And so basically what they said is, everything's being handled through grants.gov right now. So the funding opportunity exchange is still there, and then grants.gov is kind of controlling all of that. So I think a lot of the appropriations or money will move forward once some decisions are made, see where we're going to go with the money, where the government's going to go, what they're going to look like. But for now, grants.gov is where I was sent for more information. But there's still, there's still a lot of ways to look for the money. I mean, there's the federal agencies and state agencies. There's organizations that can help. Like if you're with schools, you're with churches or houses of worship, different industries looking for funding. Of course, there's banks and utilities have rebates, and there's SRECs and all these other programs. So for us, we're really in. We work right here on the tax credit and direct and elective pay side of it, but there's grants and funds and all these other, technical assistance and ways in order for not-for-profits to go out there, find the funding, see what it looks like, in order to, you got to place these assets in service. You have to pay for solar install. You got to pay for a geothermal unit. You got to, if you want to have battery storage, there's different ways of getting the money. So we will do polling question number 2 real quick. Mark, if you can help us with that one. So if you are a tax advisor or a consultant listening today, have you had any not-for-profits receive any funding? If they have any funding, would like to discuss where it came from. We know there were a lot of like FDA funded through the FDA. There were like REAP loans. There's a lot of different avenues for receiving some of the money in order to make these happen. So we're going to wait just about 2 seconds for you to finish the poll. What we're going to do is we're going to jump into a little bit of the mechanics of it. And this is like what Randy was saying, after doing credits and incentives for 20 years, who would have thought we'd be doing tax credits for not-for-profits? And so we didn't really realize that. We know a lot about a 3800 general business credit and the form and the mechanisms, but when it comes to a not-for-profit, it is very, very, unknown territory. So if it's the section 45, that's just your PTCs, 48's the ITC. These are, how the projects, they get funded, then they get designed and they get installed. You have place in service. And then what are the mechanics for getting the actual refund to the client? Just for us really quickly, I kind of threw this slide right under the 3800 just because I thought it fit in the mechanics a little bit of, you do the 3468 to the 3800 to the 990T, which we'll talk about. But what does that mean? Like, what are the projects we're talking about? So for us, I think the largest number of the clients we have or do solar, the largest kind of dollar amount are we do a lot of geothermal clients, which have been really great. There's energy storage. I'm going to elaborate on that just a little bit. There's 3 types of energy storage. We have some waste recovery projects and some combined heat and power projects. So that's mainly the technology or if you think about the projects, like that's mainly the projects that we're working on these days. And I have some examples at the end of here after we get through some mechanics. But just really, if you go to the IRS, there's actually a lot of support out there. There's the stakeholder liaison group, which I really like putting these slides up because the IRS just so graciously organized all of the credits and incentives in the exact way we do when we say what we do. So they have a really good the stakeholder liaison is a way to educate and to help facilitate all applicable entities, not-for-profits in like how to navigate this world. So they'll list out the credits. Here are the facility credits, right? Those are the asset credits. These are facility credits, advanced manufacturing. This is, the supply chain part of it. So your facility will qualify, advanced manufacturing, advanced energy projects. And then actually the CHIPS and Science Act is also, it's from a different bill, but they put it in the same portal. So 45X, 48 Cap C, 48D, these are all the things that we do. We also do 179D and 45L. So it's all interrelated when you look at it, on the big scale, including research and development tax credit is, so the 179D, as you know, if you're a not-for-profit, you can allocate that deduction, accelerated depreciation, to the designer of record. So a lot of these are intertwined, and we just serendipitously got lucky with the Inflation Reduction Act coming out, and we'll see what happens going forward. But it's going to be good. So I'm not going to spend a lot of time on the rates and the value of the credit. I just have these slides in here. So normally, if you're a CPA or a consultant, and your client comes to you, if the project, whether it's solar or geothermal converted, if it's under 1 megawatt, it is a 30% credit, but the base credit is a 6% credit. So if it's over 1 megawatt, it'll be a 6% credit unless prevailing wage and apprenticeship rules are met. So most of the time, people come to us saying, hey, my not-for-profit client spent this money, they get a 30% credit. Like, right? How does that work? Like, well, Maybe yes, maybe no, hopefully, or maybe even more. So prevailing wage and apprenticeship rules, there are certain credits that require both. Some do, some don't. Like the 45X does not require it. If you go to 45L, it requires it, but applies to multifamily. So the single family homes don't. And then of course there's a little, sub bullet point here, number 4, of there is a good faith effort exemption if you can't meet apprenticeship depending on where you are. And if you try to meet the apprenticeship rules and you can't, just due to your area, but prevailing wage and apprenticeship is a lot more cumbersome, detailed, and a little bit more complicated than people thought in order to qualify. So if your client comes to you and they're over 1 megawatt, this is probably the first question to ask. So the bonus adders, again, going to do high level here, but if you have a 30% credit, you could have a 40%, 50%, 60, or 70% credit. And so the prevailing wage is a 5x multiplier. So if you have 45L, 179D, or any of the renewable energy tax credits, the PWA is 5x, makes it 5 times more valuable for the taxpayer. If you're not meeting it, you can have you'll get a 2% for the bonus or the 10%, still a 5x, whether it's on the bonus or the actual ITC to 30%. So the domestic content, this slide is in here with a pretty, this blue box here is really critical for not-for-profit entities. So what the domestic content bonus says is if you're doing renewable energy and you meet domestic content, right, 100% domestic steel, 40% is going to go 45, 50, and 55 up in 2027. If you meet domestic content, you get a 10% bonus. For not-for-profits, certain tax-exempt entities, starting this year and forward, if you don't meet domestic content, you're going to get a 10% penalty. So just when you're calculating the credit, you're looking at your qualified basis. This is going to be a pretty big gotcha for a lot of not-for-profit taxpayers. And domestic content, if it's solar, there's just not been a lot of solar companies that are meeting domestic content. We've had good luck on the geothermal side, but you might see a 10% reduction for a lot of not-for-profit taxpayers. Energy community bonus, this is another 10%, and these bonus credits are 10% of the qualified basis. So if you spend $1 million, each one of these is $100,000 in addition to your 30% credit, which could be $300,000. So it's a big deal. It's a lot of money, and they add up. But energy community bonus, either the brownfield, MSA, non-MSA, or the coal closure. So there's the map here. If you are doing this for your client, you have to make sure you're choosing the right year because they got to change year over year. And you might need to look at the unemployment rate and then the substantiation of that snapshot in time for place and service date with the filing of the tax credit of the tax year that you're using. Low income community, this is 10 or 20% bonus opportunity. They have a capacity every year where they want to only give out, they'll allocate these low income community bonuses. They'll cap it at 1.8 gigawatts of capacity. That was for 2024. The window's opening for 2025 to pre-apply and to see if you get and you have to have the certification in order to get this. But once you get this, it's work up front. So the substantiation becomes a little bit easier because you jump through the hoops, you get your certification, and you go in. So if you get audited, should be good. Little bit more on the calculation also for not-for-profits, especially if you're working with schools. You see this a lot. Another haircut factor that you need to take into account is if there's any tax-exempt bond financing. So it will, tax-exempt bond financing, you will have a reduction, whether it's a reduction in the cost of the qualified basis or maximum 15% reduction of the credit. So if you have a lot of tax-exempt bond financing, a lot of times it's just a maximum reduction, and it just reduces down to 25.5%. So that is an adjustment. That is on the tax-exempt bond financing calc. And it's really case by case basis on what the funding is, where does it come from, how is it used. So that is on the bond financing side, but there's also grants, utility rebates, a lot of other incentives. Some of them do not decrease the amount. Some of them do. This is also case by case, but what you need to know here is there's no excessive benefit. So it cannot exceed 100% benefit. So basically, if you're getting a 30% credit, then 70% can be funded. If you're getting a 50% credit, 50% can be funded. You just can't fund over 100% of your project. This is definitely case by case, and you need to know that, like, do they decrease the amount of the qualified basis or do they not? So just another analysis and calculation of the actual tax credit number. So, again, we're doing these webinars and said, okay, it was always like, renewable energy tax credits are under Section 48, the ITCs and the PTCs are under 45. And well, we're already into 2025. So the Inflation Reduction Act had 2022 and 2023 rules, and then 23 and 24 rules, and then starting January 1 of 25 going forward, it's already changed. And the main change you need to know is that the credits from 48 go to 48 cap E and 45 go to 45 cap Y. And what that means is going forward, they're now net neutral, right? Your greenhouse gas reduction emissions cannot be greater than 0. So, going forward, like what does that mean? What is what's a facility? What's a project? Like, where's the line in the sand? How do we even know? So they don't say exactly what technology, qualifies and what doesn't, because they just want your facility to be net neutral. So it's like whatever technology you can do that is net neutral. And then they have a list of technologies that are inherently net neutral, right? Solar, wind, energy, hydro, the WERPs, the waste energy recovery property. So a lot of those are like, hey, these are inherently net neutral. So you go for them. Geothermal, if you have clients doing geothermal had a 10-year runway with the Inflation Reduction Act, so it remains under Section 48 until 2035. And then combined heat and power is going to potentially, kind of go away on the ITC side because they're not net neutral, or they'll have gas-powered turbines. Creating renewable energy, but the facility won't be net neutral. And then the glass and the microgrids expired as well. So if you do have clients and they started prior to 2025, and you can prove that the project started, what the rule says, you can choose 48 or 48E. You have the choice, but you probably want to put it under 48. So that is what we're doing going forward. So, what's a unit of a qualified facility? So they're like, it's net neutral. And so a lot of the challenge on the technical side, or the calculating of the qualified basis, is what is property? What is a facility? Where does my renewable energy asset start and stop? What does that look like? What is my, how does my technology play into that, or the design of my system? So also under here, this is where we're breaking out 3 types of energy storage, right? So there's one called BESS, battery energy storage systems. That's the electrical energy. The thermal, they're calling TESS, thermal energy storage systems. And then there's hydrogen storage. So there's a lot of technologies coming online for energy storage. There's a lot more. It seems to be a lot more accessible. I see a lot of smaller not-for-profits that are doing solar battery, or just battery or energy storage. So you're gonna see a lot more energy storage as the technology gets better, the products get better. I have a quick example in here of some thermal energy projects that we're working on. So again, when calculating the qualified basis and the calculation for 48 cap E, you read the code regs, and it's, well, what's integral? Like, what is integral to the generation of this net neutral renewable energy? And then what is functionally interdependent? So if you're doing a big geothermal project, this is good because on the face you're like, well, I of this, I spent $4 million. How much of it qualifies? Well, what qualifies is anything integral to, has the intended function of the qualified facility. It says essential to the completeness of such function. So this is it integral in creating renewable energy? And then what is functionally interdependent? So you can qualify a lot of the costs. And on the other side of the coin is, if you're looking at your facility for 48 Cap E, this is also all included in the calculation of the facility. So we just kind of broke it out a little bit on, what's the qualified investment. Of course, you have if you see PIS, that's placed in service date, right? You have to have net zero GHG emissions. And then you got to go through tangible properties, a depreciable, original use by the taxpayer, functional independent, and integral tests. So these are some of the details on the qualification for the 48 Cap E and for the qualification of determining what your qualified basis is. And you remember when I said 30% is multiplied by the qualified basis. So that is directly what calculates the amount of your tax credit. Okay, we're going to go into monetization. And this is where we'll talk a little bit of high level of not-for-profits and why these programs are awesome. And then we'll do a little bit of detail on it, and then we'll jump into some examples and round us out. So, we're really the key to, the kind of the power of the Inflation Reduction Act was the monetization, right? Like, doing the R&D tax credit for 20 years, a lot of times it was like, it's limited by AMT. You have to be taxable. Like, you have to have this tax liability. Yes, it goes back and carries forward. That's great. But a lot of times it was the usability, the monetization was limited. So when it comes to the Inflation Reduction Act and these renewable energy tax credits, there's really two types of entities that claim it, either a taxable entity or a tax exempt entity. And if you're a taxable entity, you can use the credit or you can sell it. It's sellable. You find an unrelated party and you sell the credit. If you're tax exempt, you're not going to, if you're taxable, you can either use it or sell it. Tax exempt is going to choose the elective pay. So that is where it becomes a refundable credit, like Randy said a little bit ago. So looking at the monetization, and just if you are working with not-for-profit clients, they are thinking of installing, they have some money, they're going to the board, they're getting board financing, they're looking at all the financing. What we've done is we've realized that, that in the beginning, what we're calling monetization determination is a really big deal. And looking at the client journey also helps them understand, like, one, like, is this real? How does this work? Like when we said before, yes, it's statutory. The ITC, Section 48 Cap E, and 6417, they're statutory. It'll take an act of Congress to change, which it could, but just letting them know that, yes, this is available. If you're going to spend money, we can do, a high level preliminary estimate on what the dollar amount could potentially be if you're going to put in a $4 million geothermal project for your school, for your community center, for your municipality. Like, what does your journey look like, right? Don't worry, we can help you with all the administration, the IRS portal, the registrations. You got to have the latitude, the longitude, the ownership, the due diligence, audit representation, and walking all the way through, just the receiving of the actual check, which is what they want to know in the very beginning of, like, okay, my school board approved this funding. What does my not-for-profit entity journey look like in order to receive that 30%, 40%, 50% tax credit to go back into our budget? So it just, normally we work at the end of the year, and a lot of times now we're getting pulled into the front and showing the not-for-profit entities what it looks like, and really really helping them, make the checks happen and make the install of the renewable asset happen. So like I said, code section. So 6418 is for the for-profit entities. That's where you're going to sell your tax credit if you don't use it. 6417, that is the code section for elective pay. There's this table here, little cheat sheet. Anything that's considered a P is called elective pay in the IRS portal. Anything called a T is called transferability. That's where you're going to sell your credit. You can see some of them, like the 45X, the Advanced Manufacturing Program. It says P or T, meaning you're not for profit. You can take elective pay. If you're for profit, you can use it, you can sell it, or you can get a refund as well. So a little cheat sheet on what they are. So 30C is the chargers, 45Q is the carbon sequestration, 45X, 48C, Advanced Manufacturing Energy Program. The CHIPS Act is 48D. So that's a little cheat sheet on what is available for what credit. And then just again, to reiterate, we've been using this a lot for showing the journey for not-for-profit companies. One, understanding that, yes, you qualify, your municipality, your agency, tribal, tax exempt, the process all the way through to what we're going to talk about right now is 3468. There's different forms depending on what asset, what technology you're claiming, what credit you're going to actually claim, and what code section. Most of the ITCs are on the 3468. 3800, again, general business credit. Not-for-profits don't have a lot of familiarity with it. And then the 990T. So this is the IRS portal. I'm going to kind of go through this part a little quickly. You have to register your intent. They're asking for 120 days. You have to have ID.me account. You got to be applicable entity, eligible taxpayer, registrant. You got to go through. You can take away these slides as well. There's, the P and the T. There's a few terms that make it a little easier to go through the portal process. What we've been doing is just getting a client champion and a tri-merit champion and walking through the portal together, because you have to have the registration number in order to actually do the filing process. So earning the credit, submitting the package, there's going to be 5 modules within the portal. There's your account. When it first came out, they asked the IRS asked for a 120-day period of when you go through the portal. So you're going to be installing, designing, installing, placing a service, and calculating your credit on one track, simultaneously going on the IRS portal and saying, hey, by the way, this is my renewable energy asset. I'm placing a service. This is the latitude. This is the longitude. This is my ownership requirement. There's some documentation. And so you're kind of doing those in tandem. And then they come together at the end when the IRS does say, this is your registration number. It's going to go in 3468 to the 3800, and it's going to go to the 990T. So just a few snapshots of what it might look like. Here are some of the questions they're asking for your facility property, right? This is what it's going to look like. Construction, place in service. Here's your GPS coordinates. And then choosing the right program, making sure you're choosing the right program, going on the right path. They did put the CHIPS Act in the same portal, so just kind of knowing how to navigate it. And then the IRS does publish a lot of resources under this. And like I said before, there are stakeholder liaisons, and there are people that can answer the questions. We've gotten pretty close with that group as well at the IRS, which is a lot different than how they treat the R&D tax credit and the tax credit providers, but it's been really good so far. So you look at the timeline. So you have to place it in service, complete the filing, the deadline. So your placed in service date is critical, and then whenever the next tax year that ends after your placed in service date will be the tax year. And if you don't file a 990, a lot of religious institutions, houses of worship, churches, you can choose a tax year in order to file your 990. So we'll jump into that. after we do polling question number 3. So where are we? Almost 40 minutes after. So question is, do you file a 990T on behalf of your not-for-profit clients? So a lot of times what we do is, if we're working with our CPA channel partners, and for years we work on the tax side. Now we're getting better, stronger relationships with the not-for-profit side of it. We're working with the audit side a little bit more. But what we're doing is we're saying, okay, if you already file 990s, you want to file the 990T, we can just provide the pro formas, 3468, the 3800 instructions, and you can do the 990T. If we're coming directly to a not-for-profit entity or a consultant or someone that just doesn't want to do the 990T, we've developed that capability in-house as well. So there's, I'd say maybe it's straightforward, maybe it's not straightforward. Definitely the calculation of the credit can get a little complicated, coming in from the 3468, filling the form out correctly, flowing through the 3800. But the 990T, if you file a 990, the 990T should, be a little bit more straightforward. There's also, like, if you don't file a 990T, there will be an option, right? Government organizations and cities are looking to claim the credit. There's a way to, I guess, bottom line, if you don't ever file a 990, you still have to file a 990T in order to get the credit. It's the only mechanism in order to get it refunded, corresponding with 3468 and 3800. So you'll go in and you'll choose that you're an applicable entity on the organization type. And then you'll see the instructions will show you exactly how to route all of the numbers coming in. But the elective payment election amount from form 3800 goes on line 6G of the 990T. And then if in the beginning, a lot of this is cleared up now, and this is, we were like, hey, on a future webinar, we're going to explain that all of this is completely operational now. But I left this slide in because, like, in the beginning, the software didn't allow for certain entity types to be chosen. I think most of those are fixed, but if you are having issues, they offered a very short and convenient email in order to file. And just for anyone who's sleeping, I'm going to say what this is, just see if I can get a laugh. All right, irs.elective.payment.transfer.of.credits at irs.gov. See, it's the government. They just, instead of putting EP at gov, they did that. So if you do need to communicate with them, they do respond to that. You can also call, but we've noticed that all of the electronic issues have been fixed. So should be good. One other note here, if you're working, we've noticed that, so when the Inflation Reduction Act came out, right, and it actually says right here in Rev Proc 2439, the Treasury Department recognizes that most applicable entities are not familiar, right? Like they don't know how to do this. They don't really know how to file an extension. They don't understand 990s and 990Ts. So what they said was, from the Inflation Reduction Act all the way to any year end of November 30th, 2024, so the end of last year, they just allowed an automatic 6-month extension. So what it did is it allowed 11 months and 15 days, because the filing deadline is 5 months and 15 days. And they just do an automatic 6-month on that. So if you're a not-for-profit entity, it says they have a year end from November 30th, 24 or prior, they have an automatic 6-month extension. Anyone closing after that term, you have to file an extension. So the most important thing is understanding, wait, you did solar, you placed solar, you did geothermal, you did battery. Like, what is your placed in service date? That's what we need to know. That's what you need to be asking your clients of, what is that? They call it a PTO, permission to operate, like that placed in service. And that tax filing deadline is critical to knowing whether you need to file if you get an automatic 6 months extension, because if you miss it on a timely filed return, you miss it. You can't go back and amend for elective pay. Okay, enough details. Let's talk about some projects we're working on. We got 15 minutes to round it out. So this was a school in Illinois, and we've noticed that a lot of schools are looking at geothermal heat pumps. Are fantastic technology, fantastic projects for schools. It's going to potentially take them completely off grid, lower their energy cost. This was a geothermal project, cost $4 million. So the ITC was a 30%, which was $1.2 million. We qualified it for domestic content and the federal tax credit of $1.6 million. So this is a school that spent $4 million, is going to have, cheap, if not free energy going forward. Entirely new HVAC system from geothermal heat pump and well, and receiving a $1.6 million refundable check for doing so. So really, really, really cool stuff. So church in Texas, small project, 500, like $500,000 on solar PV. So their ITC is 165,000. They were in energy community. So church is filing a 990T for 220K. Like, awesome. They're very, very happy. This was a municipality. This is one of the ones why we created the slide of like how to file the 990T and choosing your entity type and how it works and how it flows to the 990T. So we learned a lot on this one of how to actually file for the 990T and choosing the 6417 as applicable entity. Anyway, they're getting a federal tax credit, and they were located. They had a bond financing adjustment, so they had $104,000 ITC, but they had bond financing, so we had to reduce the credit. So that's just a quick example of what that looks like in practice. So $88,500, and they're ecstatic. Here's a bigger client. So this is a cogen, also called combined heat and power. This started prior to 48 Cap E, so it's going to qualify under the old rules. The date there is January. Anything before January 29th of 2023, you don't have to meet prevailing wage and apprenticeship requirements. And anything prior to 25, you can go under 48 rules, not 48 Cap E. Don't have to be net zero. So this one, it was a $30 million, it was a $150 million remodel, whole, new addition to a hospital. Qualified basis, 30 million. So the ITC at 30% would be 9 million. And we're going to be filing a 990T for a very, very large check. Community center. This was an interesting one here. Wanted to show you. So best battery and energy storage, test thermal energy storage systems. So what this is like Boys and Girls Club of California, 300 locations looking to put in this, it costs about $24,000 each unit. But if you add them all up, it's a $7.2 million investment. And they're still looking to install this year and the next year, across all of these units, but they're literally just going to HVAC and putting in this thermal energy storage system. And it's going to be a lot of 990Ts because they're all going to be filing separately. But if you add them all up, it's $3.6 million. So you just never know if you have these not-for-profit clients. You just never know what the asset's going to look like. What is a system upgrade you're doing? Because when this client didn't know it was going to qualify for this. So going to each one and saying, look, yes, you're going to get this credit. Also doing the integral and functional independent test. So just another example of how to locate, how to identify what might be a good project. So this one of my favorite ones, this is a geothermal heat pump system. It's community center in Wisconsin. It's actually Boys and Girls Club, Dane County. This is really cool because it's like a learning center for the youth in Dane County, Wisconsin. And what they did is they put in this geothermal unit, but they put it's actually it's a place for kids to come and learn trades, about careers, and it's like career center for children. And they put a big window into the mechanical room of the geothermal unit. So not only are the youth learning, but they're actually seeing the geothermal heat pump system like in action and learning about renewable energy and all that stuff. So this is really, really cool project that we're very lucky to be a part of. And just, being part of the community, and not only the community for, what they're doing and their mission, but also, there's an architect, construction, energy consultant, and then Tri-Merit helping just to, count the beans, so to speak, count all the beans, calculate the credit, and actually help the dollars go back to the not-for-profit entity. So been really, really, really good, rewarding work we've been getting into on the not-for-profit side. So one more polling question before we let you go. It is 51 after. We got 9 minutes to round it out. Have you had a not-for-profit client receive a refund? Renewable energy tax credits? If you have, we'd love to communicate with you. So we'll give that just a minute. Thank you, Mark.
We're getting some yeses on the.
Getting some yeses. All right. Yeah. Fantastic. Fantastic. So Randy's back on. This is our last slide here. What's that? You're always here. Yes.
I was always here. I was learning along with everybody.
Yeah. So this is our last slide here. I'll turn it back to Randy, but just really quickly on, it's like, it's been some feel good work that we've been doing with helping churches, helping schools, helping, the Boys and Girls Club, helping, all these not for profit entities that have, they have their own mission, so in order to provide their mission, it really helps to have, a lower energy bill and, go renewable. It's something like you look at universities or a lot of other not-for-profits. A lot of these entities have been wanting to install renewable energy assets for the last, 10, 15, 20 years. And now that it's kind of refundable up to, 30% or higher of the credit, now it actually pencils out. And it's a great way to actually get these renewable energy assets installed and up and running, functioning, and either taking them off the grid or substantially lowering their bill. And in the case of the Boys and Girls Club, showing the youth that, hey, this is what this looks like. So,
all right, Barry. Well, thank you so much.
Yeah.
You can obviously hear Barry's passion for this. It is a feel good area as well as something that we just really enjoy. But you now listening on here as the advisor, as the most trusted advisor your client has. What should you be doing from 25 going forward? Well, ask the question. Have you done anything? Nonprofits, not-for-profits, you're normally not doing any tax planning. It's time to do some potential tax planning. And as I said at the beginning, it's time, if anybody is considering it, to probably jump in, because we don't know. We know where we sit today. We don't know what's going to happen tomorrow. And we don't know how quick tomorrow is going to come. Is there going to be everybody knows there's going to be a new tax bill. It's going to happen. And what's going to be in it, we don't know. But there is some concern that some of the renewables will be affected. So it's time to look at it. Just understand deadlines for filing, like Barry was talking about before. Placed in service date's important. The prevailing wage, we didn't be able to get into a lot in apprenticeship rules. Just know they're out there. Understand them. We're always available to go over that. Realize that those probably don't affect your project as much as you think they might, especially as like Barry said, when you have a project that's less than 1 megabyte of output, probably doesn't come into play. But otherwise, which is a significant number of output. That's a significant output. So you probably have, just as an example, 100,000 square foot roof with solar panels probably falls under that 1 megawatt what's the word I'm looking for, Barry? Making of the power. That's the technical term.
Sounds good.
Right. But the other thing that we didn't have time to go into, but I want you to be aware of, especially when you're looking at for-profit entities, is this is usually not a standalone incentive. And so you as the advisor, you as, again, the most trusted advisor for your client, when you see a taxpayer that's dealing with some kind of renewable energy project, there's probably other incentives that qualify, potentially R&D, potentially 178D, or cost segregation could segregate out expenses and accelerate it faster. So there's a lot of opportunities. Just be aware of that. And if you have any questions, don't hesitate to reach out to us. One last time, I just want to say thanks to everybody. And if you have any interest in the conference, I know Haley put in the Q&A. I put in the chat, which I'm not sure you see the chat from my end or not. But BTG, Bridging the Gap, btgconference.com. Early bird pricing ends the end of May. I think it's currently $9.99. I think it's going to $11.99 after that. A lot of fun and a lot of education there. So. And really, it's more about practice management, mental health, physical health, ways that you can run a better firm is what the conference is about. So if you're interested, take a look at that. Again, thanks everybody for being here today. Thank you for Barry for sharing his awesome knowledge and for teaching me R&D tax credit 19 years ago. And we will see you all next time. We've got, I think, 2 webinars coming out next month. So take a look at that and we'll see you all soon.